Well, thanks for being here, man.
Thank you for having me.
Rush, what's your, what do you go by Rush? What's it? Because I know your name is a little bit longer than that.
Yeah, a little bit. So my full name is Rushabh. Shah is my last name.
Yep.
And ever since I moved here, since about 6th grade, some of the teachers were struggling with it a little bit. And so eventually I became Rush just because it would just become a dance, especially when substitute teachers were in.
Yeah.
And then people liked it too. So I was like, okay.
Yeah, Rush is a cool name. When I heard it, I was like, Rush.
Yeah.
Huh. This guy's probably snappy. He's snappy and witty.
I love it because it's funny because it's almost become a personality test for me at times.
Yeah.
Because I'll have different people use Rush as a different reference, and I'm like, huh. So like there's certain people that are like Rush Limbaugh, and there's certain people who'll be like Rush like the band, and yeah, like there'll be different sets, and then it's funny. Eventually, I'm like, all right.
I think I thought of like Rush Hour.
Rush Hour. I've gotten that one too.
Clever, quirky, funny kind of overall vibe. So just for like an elevator pitch, really simply, what do you do?
So I am a real estate industry professional. My specialty is, I'm literally, it says on my job title, is I'm a loan solutions specialist.
Okay.
My job is obviously not just to provide traditional loans that everyone can do, but also help you with loans that a lot of times no one can do.
Right. And so speaking to that last part, so I'm an entrepreneur. I own a business. I do my taxes favorably to that business. And to be honest, I didn't really think I was going to be able to get a house at all. I'm currently closing on a house, and you were the man to make that happen. What would you say to someone in my position? Because truly, most people will say, if you're not a cookie cutter employee, you're going to have to, pay, like overpay in taxes for a certain amount of time so that you can qualify for a house. And it's like, well, it doesn't make any sense for me to do that. Sure. What's your kind of solution to that?
Okay, so I'll go into the simpler side of it first to answer your question. There are so many people right now, especially, this was before COVID as well, but coming out of COVID, you've seen a very large influx of people who've had to create side hustles in a bunch of different ways. The world has changed in terms of even cookie cutter employees now know that there's other ways to make money and get to financial freedom or better financial comfort.
Yeah, absolutely.
Right? And so there's no one true way, but I don't want to say sadly, but where we are right now is what I'll talk about.
Sure.
The traditional expectations and I guess the quote unquote boxes that you have to fit into have not changed with those times yet.
Sure.
Now, and some numbers are never going to lie, right? So this is way above, I'm not the smartest guy in that room, Somewhere the actuarial sciences and stuff, they're like, look, as long as these things fit, our system works.
Yeah.
You have to mold to that.
Right.
And along the way, there's a bunch of people where it's like, wait a minute, how is it that as a self-employed person, just like yourself, how is it that someone who might be your employee can afford a house double what you could afford on the paper in those same boxes?
Yeah.
And so along the way, it's called non-QM.
Okay. What does that stand for?
So there's non-QM means like non-quality management in essence.
Got it.
But what it means is, or some people might say non-quality matrix, right?
Yep.
So a quality matrix is when it's the cookie cutter stuff. It's easy. There's a matrix for it. You fit into it. You're done. This is where it gets more creative because sometimes, there's businesses that'll make a combination of cash, a combination of cash plus that. And so, of course, the system's been designed where if it's not showing up on your tax returns, then it doesn't exist.
Right.
That's not how the world works, though.
Right.
And especially now, this post-COVID world.
Right.
It also goes where, hey, if you haven't had a certain job or certain industry for a certain amount of years, you're technically a risk where you might be making 100,000 now, but you've only been doing it for 6 months. How do we trust that you'll stay consistent?
Right.
But at the same time, someone can create an LLC and all this other stuff and do the exact same thing. And they have certain lines where it's like, hey, whether you're good at business or not, we're only going to give you loans based off of your deposit.
Right.
But if you're an individual, no, you need to be a business owner, fit into certain boxes. So along the way, I would love to say that I'm the one who discovered it. I just discovered the opportunity more than anything. Yeah. And so have many others before me because I've learned from them.
Sure.
And so I'm like, okay, there's only so many doctors and engineers.
Right.
And you'd be surprised. There's so many people that are making $150,000 and they can't afford or won't qualify for that home. And there's people who are making $70,000, $80,000 at their full-time job, but because of their side hustles, whether it's 1099, I mean, I have a bunch of clients right now for the last 2 years because they were never in a tech field or a fairly stable field. They were in a field where they were replaceable. And so when COVID hit, a bunch of companies had to shut down, cut employees, even if it was temporary. No one knew what was happening. Uber drivers, DoorDash. I mean, if you really thought of as an industry, that person is a transportation specialist. That's just how I categorize it. Whether they're delivering food or delivering people, they're making solid money. Their 1099s are showing up as 70,000, 80,000. I mean, they're really hardworking. Right. And now they have to fit into this self-employed box where all these deductions have to come through because normally when they were W-2 employees, those taxes were already done. So they knew what they were getting at the end of the month and they designed their life around it. Now they could make $11,000 in a month, and sometimes, you know, you're not used to that kind of money. You might splurge a little bit. I mean, it's new to you. So before you learn some positive habits, by the, you know, and of course their CPAs are doing the right thing where they're like, let's minimize your tax hit because you're not used to having to pay taxes at the end of the year. You're used to your taxes already taken care of and you're waiting for a check.
100%.
Now you're going to be sending a check. Right. So all these adjustments happen. So along the way, I'm like, okay, well, if these adjustments are happening a certain way, let's figure out how we can help more of these self-employed people or semi-self-employed people get into homes. Why is someone who's making $200,000 but they have 4 different sources of income, which are legitimate, by the way, being denied a home, or they're having to pay so much higher in terms of down payment and interest rate?
And when you say that, you're talking like bank statement loan, 20% down, or...
Everything, a combination of everything.
Yeah, because I thought that was the only thing I was going to be able to do was a bank statement loan with 20% down, and we're in California, so...
Even in non-QM, there are certain matrix. And then after that, what happens is, and I'll be honest with you, after that, sometimes there are industry professionals. Of course, everyone's in here to make a living and make a profit, and it's still a business, right? But sometimes it's like, okay, I can... The amount of time I would have to spend to get you qualified could equal to, especially if I'm a high efficiency, my marketing is solid, and things are running for me, I may be at the top of the game, and so I might be giving up 3 phone calls just for the time I'm spending with you to get you qualified. And sometimes if I haven't done those loans in a while, now I have to get up to, you know, par on the guidelines before I can advise you, right? I might end up spending, and you have to measure your time a certain way, just like you do in your business or in every business, right? So I might have to spend 4 loans worth of time trying to get your loan to even qualify just because it's so complex.
The non-QM type loan.
It's non-QM, but non-QMs can be also very simple. Like, hey, give me 12 months of your bank statements. We look at your deposits. We average those out. There's certain calculations that go in. That's your income, and we'll get you a house. And sometimes it moves quicker than a full document loan. So it's not that there's a time thing or just non-QM. It's just taking the time to understand each client. In your situation, it's really unique because... I mean, you do really well. Not all of it shows up on paper. We had to adjust a few things, kind of create a game plan, which we did. You followed that game plan. Biggest one, see, look, you could be a doctor. Sometimes you can have a patient where the fix is simple. I would say I'm not a doctor, but if I was to compare that, you were fairly simple if I knew what to look for. It was a few things to change, a few things to adjust, and here we are. And you know, knock wood, you're on the way. We're just waiting for...
Almost there,
We're almost there, right? And so it took the time, but I committed to this because I've had a bunch of good coaches. Like I said, I'm not pretending I'm sitting here like I'm the only... I'm not arrogant enough to be like, I'm the only one who can do this. But I am confident enough that I don't know too many people who are going to put in the time and effort to get your one loan. And I don't want to get in any copyright trouble by saying this here. But I will tell you this. You know, everyone always wants to be the Wolf of Wall Street kind of thing, right? I've realized over the years, a long time ago, and I actually own that site, so that's why I don't want to get in trouble. But a long time ago, I registered yourambassadorofquan.com. I was a huge Jerry Maguire fan. It was when I first started in the real estate business. It was, I watched that movie like every quarter.
Dude, Jerry Maguire is classic.
Because what happened is I got into the business in 2007. And so I got in right before the peak hit. So by the time I was just learning, everyone was losing everything.
Right.
So here I am getting into the business, and I'm like,
man.
what just happened?
Right.
And so, I mean, I was lucky that where I joined to start my career, they were a foreclosure specialist office.
Sure.
You know, and I didn't even realize the value of it.
Oh my gosh.
They were just nice to me, and they were like, join us. We're going to help you get started.
And this is in your loan career?
No, this was just for real estate first.
Oh, you were an agent?
I was first just an agent.
Got it.
Right? And then obviously along the way, you learn everything pretty quickly, because if you don't understand the loan process, you're not going to be a successful realtor for a long time. You don't have to know everything, but you do have, like, you don't have to be a general practitioner. Like, you can be a general practitioner.
Yeah.
You don't have to be the heart surgeon.
Sure.
You better know where the heart surgeon is.
Sure.
And you better know the 3 steps leading up to what it's going to take to get that surgery done, right?
I got you.
So it's just the same way. I still had to learn about the loan products, you know, and all that, because it saves time. It was just about efficiency and getting it done. You don't want to break someone's heart by giving them false hope when they're calling you.
100%.
Right?
100%.
So that's where we were. And along the way, these are the people I came across. And so I learned how to do difficult stuff early on.
Sure.
I didn't have my own traditional, hey, I'm just looking to get out of my house. That's not a short sale. I'm not in trouble. I didn't get a traditional listing in my career until 2010.
So at what point did you go from agent to loan specialist?
Between about the entire idea and the process started back in about 2012 and 13.
Okay.
And then it started to come to fruition in about 2015.
Okay, gotcha. And what made the switch in your, why'd you do that?
It's gonna sound cheesy, but it's the 100% truth. I actually had the best year of my real estate career, and I'm talking just in numbers,
right?
But also, you know, everything was working. You know, clients loved me.
Got it.
You know, I was in a happy place. I had just become a dad, you know, in 2012, and so now I had also just become a real estate investor. I had picked up my, you know, with a nice amazing group of partners.
Yeah,
we had just picked up some properties. I mean, everything, you know, just. Everything was in place. Yeah. And then in 2014 and 15, I had a few moments where I started missing a bunch of firsts because I had to do an open house.
Right.
And, you know, this is the business. It's what it is, you know? Right. Just like, and this, trust me, this is not even as a sob story. Think about first responders and all these people. I mean, they put their lives on the line. I wasn't doing anything on that level. But for me personally, I have my one son. He's now turned 2. He's now turned 3. And I'm missing so much on the weekends.
Right.
And I also can't say no. It's livelihood.
Right.
You know? And yeah, my wife is in healthcare. She's amazing. But at the same time, we're still a 2-income family. You know, it's just the world we live in. And it got to a point where everything was good, and I was still very miserable on a personal, like nothing in here. You know? I was happy for my clients. I was seeing so many of my friends, peers, including my wife. It's like, man, at this point, I was like, even though I'm doing really, really well, I'm doing better than some of my peers in the sense of not in a negative comparison, but just like you take inventory with someone that you care about or you've known for a while.
Yes.
I have a bunch of friends we went to college with. They're all in healthcare and certain professions where I feel like their jobs at that time, I was like, man, it's so boring. You're like 9 to 5 and then you're done. And then now you got to fill that time. I'm constantly doing new things. Like I have clients. At that time, it was a client who was starting a tequila company.
Right.
I don't know any doctor who's working a 9 to 5. I mean, he might know the person through social things.
Yeah, no, that makes sense.
This was part of my job. He was looking for loans, and I was helping him out, and he was thinking of commercial real estate. And, you know, real estate's much bigger than just houses, right?
Yep.
So life was good.
Yeah, absolutely.
And I was still miserable.
Life was good on paper, but you were...
I got home, I looked at my son, I realized what I'd missed.
Yeah.
And so I was like, how do I still stay in this? And then I talked to a few really, really awesome people who were willing to share.
Yeah.
At times, they were at the same level as me in terms of success.
Yeah.
And they were still willing to share. When you're up here, you're willing to help someone down there.
Sure.
It becomes your obligation if, you know, you truly respect your profession, right?
Yeah.
I couldn't depend on the people here. If I'm here to pull me up, it's not fair to them.
Right.
There's people that were at the same level and people above me. They were all more than generous with their time, with their insight, and also relatability. There's a couple of people. They're amazing lenders still. They're like champions of the profession. And at that time, like one of them is a close friend. His kid's only 4 years older than me. He himself is barely 4 years older than me, if that.
Right.
And he took his time and he's like, I understand what you're going through. This is not going to stop. You need to figure this out.
Sure.
I'm here. There's only so much I can guide you with. And then he was like, well, industry-wise, there's no rule that says you can't pivot to this.
Right.
You still love it.
Yeah.
You don't know what else to do because now you've done this for 7 years.
Right.
And I got in such a tough time in the industry that when things are going good, why would I want to go out now? I put in so much work to get there.
Yeah, it's got to be a tough choice then.
So it was a tough choice, but it's been an adjustment. And then since 2016 onwards, I started my tradition where I'm like, okay, the real estate practice, unless I'm going to hand it off to other agents, referrals can still come through. I still want to make sure the clients are still happy because, you build these relationships like with you.
You want to maintain.
There's going to be 3 other things that you're going to need after you get keys to your house.
100%.
And those might not all be business transactions, but we're here for life now.
Right.
Right.
Exactly.
I want to know what else is happening. I want to know when you have your housewarming party.
Yeah, absolutely.
Right? All this other stuff.
Absolutely.
All the good times too.
No, absolutely.
So that's part of that business. And so now I'm like, how do I get the best of both worlds?
Absolutely.
And thanks to this advice and then a bunch of good mentors that helped.
Best of both worlds, meaning make good money and still be there for your family.
And be part of this. I love this industry.
And so best of a lot of worlds. Still be in real estate, still make good money, and still be there for your family.
I'm proud to say that unless I was genuinely traveling or something, I have not missed one Little League game for my son.
Yeah.
Since roughly 2018 and 19.
That's amazing.
And that's, again, he's fairly young, so he didn't start also getting good and competitive till then.
Yeah.
So it's one of those where it's like, before that, they're just learning, so it's cute to be there. It's wonderful. They love that you're there, but they don't really care.
Sure.
But the games that he cared, when he got his hit, when he got a win, when he's the guy, he made All-Stars for the City League, and that's not something you get to pay for and have your kid play for.
You got to earn that.
That's where the league decides, you're going to represent the city, go for it. And he got that experience last year. I was able to be there at every game, thanks to the fact that I switched to lending. And that's my story for it. That's my reason for doing this.
Is what you can earn comparable?
Well, you have to work about 2.5 times harder, even though it never seems that way, I promise you, than most realtors. In terms of the compensation, you have to work 2.5 times harder. You have to do more volume. But the one blessing, which is very ironic when we bring it back, the same banks and everyone that has created all these boxes are the same ones that created banker hours. So we can talk all we want on a Saturday and Sunday, and I can see you, but I can do nothing for you until it's Monday to Friday.
Oh, interesting.
Which is why it frees up the time for the family and all those
There's nothing happening anyway.
The second thing is the digital world. I mean, I'm never going to say COVID's a blessing, but that time where it forced every industry to pivot was a blessing because we went fully remote. So now, if you remember, one of our first calls was, I'm like, hey, man, I'm at my son's golf tournament. Is there any way I can call you back in a couple of hours?
Yeah.
And then you were like, well, I just need questions on this and this. And what would my payment be? And I'm like, all right, give me 30 minutes. And I was able to send you a screenshot.
Yeah. No, for sure.
And I'm not saying I did some rocket science or magic. No. It's just the digital world is where it is, and it's a blessing. So, it's one of those things. I wanted to make it sound like it's all cloudy and cotton candy-ish, but the truth is, everything I've wished for, I have eventually gotten.
Right.
And even the universe, technology change and all these. Oh, by the way, since you're enjoying this, let me make this easier for you.
Yeah, no, for sure. That makes sense. That's a very good explanation of that. Now, question, off camera, before we were talking about the difference between these non-QM loans and pre-2008 loans. Is there a comparison being made? Is that what we were kind of getting into?
100%.
Now, why?
So,
why are people making those comparisons?
Well, you have to, because they had it's not like these loans were just invented. They've been around in different shapes and forms for years. Yes. They still are. Mm-hmm. So eventually, they just named titles after it, right? Because they became cautionary tales, right? So for every 6 or 7 successful loans where the people knew what they were doing, but they took on bad loans because, whatever you want to call it, your own ego wanted that house more than your stomach or your wallet could afford. Sure. But then you're going to turn around and be like, look, you fed me so much, right? So you can have all these cliches. Yeah. So the truth is, these kind of loans have always been around. Yes. But eventually, people got greedy on both sides. The people giving them and the people taking them. Right. And so that's why they had to start regulating certain things. Right. That's why, sadly, the people who are doing it the right way always end up they always end up stuck in the middle because they're like, what did I do? I'm trying to do everything the right way. You told me to do these things, but now you've moved the goalpost. Yeah. And now all of a sudden you've also changed the referee. Right. So that's what happened. So these non-QM loans were around well before. The problem was, I know your financials. Obviously, I'm not going to say them on here, right? People who made 90% less than you were buying the house you're buying now. Sure. So somewhere, something wasn't kosher on both sides.
And was it just going straight into foreclosure?
Well, a lot of times, at times the person giving the loan knew what was going to happen.
Yeah.
But other times the person taking the loan also knew that there's only two things that are happening. First of all, this is 0% out of pocket, or maybe 1% or 2%, whatever, right?
Yeah.
I want you to think about, go on a smaller scale, right?
Yeah.
If I told you can have a $50,000 car and you're like, great, and you've never seen that kind of car, or you've seen it, but you've never thought you'd ever get it.
Yeah.
Because you were always like, I have to put 10,000 down, I have to make this per month.
Yep.
And that's what I was always told. I could walk in the dealership, I would do everything, and they would reject me.
Right.
And now along comes someone who goes, bro, you can always flip this car. Right? It just, that's the same logic.
Right.
But instead of 10,000 to get this $50,000 car,
0.
you have to come in with $500.
Oh, jeez.
$1,000.
Whoa.
And then you're like, what about my payments? Be like, well, you can use up some of your savings and keep it for a month or two, but this car might become a classic in a month or two.
Right.
You'll be able to flip this.
Right.
Or hand it off to someone else.
You're
and if things are good, you could always refinance this and maybe get, this is both sides.
Right. Like thinking about The Big Short, the movie. I'm sure you watched that.
Big Short is, I mean, look, there's always theatrics to everything, right? But if I was to say, because I joined the business during that time, right? And so maybe I didn't know all the technical terms and all that they use in The Big Short until much later.
Right.
The math concept was super simple. I come from a family of businessmen.
Yeah.
You know, I'm not saying that that makes me extra smart or something, but in terms of just, you know, you learn things from both the good and the bad that your parents, or, you know, like my dad's been self-employed pretty much his whole life, you know?
Yeah.
And so he's made mistakes, of course.
Yeah.
And he's also done some great things, right?
Yeah.
And I've gotten to learn from both of those sides. So the one thing I've learned is early on, I was fairly weak at math. And if you were to ask my dad today, my dad's like, he would still, am I allowed to swear?
We'll do whatever you want, yeah.
Okay.
Yeah.
Well, my dad to this day would still be like, his heart is great, his mind is great, but I'll kick his ass at math.
Okay.
And he's probably right, and it's okay.
Yeah.
Some of my cousins are much sharper with the numbers and also much quicker, and they calculated it differently, and I don't, and that's okay, but I still get to learn from them.
Right.
Right? But along the way, I'm like, come on, guys, like, are you really going to go buy this house? And so that's why I was very lucky, because I joined the office I joined.
Right.
My broker from day one, my mentor, he was like, look, man, you can make the money and you can go to bed. Like, no one's a saint here.
Yeah.
But I'm letting you know, would you do this? Would you buy this way?
Right.
And I was like, no. My dad would be like, are you out of your mind?
Yeah.
Like, you're going to ruin your life this way. I'm like,
it.
then what are you selling?
So you're selling life ruining programs, but so pre-crash of 2008, you were in the industry, and you were like, your mentor was like, you can do this. He was familiar. He's like, you can do this.
Look, there were certain buyers, because I was new, right? So I was scrambling. So whoever gave me the time of day, I wanted to get a deal done, right? I still have to feed my family at home too.
Right.
And I was young. I was newlywed. My wife was still not finished with all of her licensing and everything to take off in her profession. She was still finishing her school for all, intents and purposes.
Right.
And so I'm like, okay, we're technically single income.
Right.
And so, but do I really want to bring this home?
Right.
And so I still had to learn. So sometimes the clients are like, I'm interested in buying a house. Can you help me? And this is old school. This is pre-digital. I had my Motorola, the Razor, the flip phone, because Blackberries didn't come out. Sadly, Blackberries and iPhone 1 didn't come out until 2 years after that, after I joined the business. Right. So there was no, hey, let me look this up. So whatever I told the client, they had to believe. There was no, let me Google this and fact check you. And what's the one, the Truther, the Snopes thing?
Yeah, Snopes,
whatever. There was nothing. There was no article they could look up to be like, this is bad. There was no app. There's no such thing as an app.
Right. They're just listening to you, and that's what you
trust
give them
me
the
on.
answer.
And the only other option they had was to go to someone else like me in the industry who was much more savvy, who was much more seasoned, and because of that, they also had thicker skin. So they're like, "Come on down."
Yeah. Gotcha.
Right.
Yeah.
So that's where he kind of left it up to me, and I'm like, listen, if you can do these things, that's the way to do this.
Yeah.
Otherwise, these things will happen to you.
Right.
And I wasn't the lender. I was just the realtor on it. But I was also not that dumb that, I'm like, okay, come on, man. Like, they imagine a $4,000 payment that's going to become a $4,100 payment after 3 years. And if you don't make that payment, it continues to get added on to your
How much did it start as? It started at what price?
No, it's just as an example. For example, you make $5,000 a month, and your monthly payment's going to be $3,900.
Yep.
And it's fixed for now, but in 6 months or 1 year, however they did the adjustables or reverse amortization loans and stuff. Well, in 6 months from now, when your payment goes from $3,900 to $4,200, you could always sell.
Yeah.
I mean, the 500,000 house is easily going to become 550 by then.
Right.
I mean, this is literally a training pitch from back in the day.
Jeez. That's rough.
I know.
So your mentor's like, you can do this, but you probably shouldn't.
No, my mentor's like, I'm going to leave this up to you. I wouldn't do it, and I want you to look at the numbers and in good conscience, if I was selling this to you, would you buy it? Then what are you doing talking? Be honest with them.
Right.
And some of those people actually ended up becoming my first client in 2008. They went out, they cleaned up their, and back then there was no digital path to it. They made sure that all of their taxes were filed properly. Two of those people actually could have easily done those risky loans and everything. Yeah. And been in a bad situation financially 2 years later. Instead, it wasn't like I was the reason, but I did reason with them. Right. They listened. So the credit goes to them.
Right. That makes sense. You just spelled it all out and did what you did.
Sorry, like I said, it's first time here, man. So if I'm too long-winded, please feel free to let me know.
What you're saying. So you spelled it out for them, and you let him make an educated decision, which sounds like.
And someone you're working with very closely right now, was part of that same office, man. Yeah, that's why there's so much love. There's so much regard, right, and professional and personal like courtesy,
right. Absolutely. Now, what are some common misconceptions with home loans? Just like the typical thing that you hear and you're like, that's not right. Why does everyone think that?
Okay. I don't think it's a misconception, but everyone wants to put those, the term, right? The rose-colored glasses on. Like, you don't want to see the thorns. Yes. So I think it's a fantastic program, but people need to understand that when it comes to down payment assistance programs, they're built to help everyone, but they're also designed so that everyone doesn't qualify.
For sure.
And it's the toughest challenge because how are you going to tell someone one from the other? First of all, you can't make that determination until you get the financials. Right. So how does the marketing usually go? Did you know the state of California or whichever one, right? Yeah. Did you know you could buy a house with 1% down? Now, as a business owner, when you just think strictly business, right? And pick any industry, right? Yep. If McDonald's is saying, I'm going to give you something for 99 cents, you think Burger King's still going to stay at $6? Right. Do you think, I mean, sometimes, so the way it is, someone's going to start marketing it. And in this case, sometimes it's a government-backed program. Right. And they're like, you could qualify for this with 1% down. Right. No one ever goes, by the way, you got to know your payment's super high. It's going to take a lot to qualify. For every 10,000, I don't know what the exact metric is, so don't hold me to it. Sure. But pretty much for every 10,000 applications, in reality, less than 1% need to. Because remember, some of this, I mean, where do you get the funding from? It's from taxpayers. Right. Well, who are the taxpayers? Like, it's cyclical. Like, it's not like the money came out of nowhere. Nowhere and it's going nowhere. Yeah, and if you qualify, fantastic and kudos. Second side, no one tells you is a lot of times sellers are in a hurry to get out of this. Yeah. So if something is shaky, if if something changes with your job and all these, like the guidelines are also pretty tight. You have to stay in that box, not just fit in it.
What are some of the guidelines?
So some of the guidelines are like depending on, what you've done for a living. Yeah. So your work history matters, right? Yeah. So a lot of times, and again, it depends on the loan program. Sure. But some loan programs, like you have to be in a certain industry for 90 days or 6 months. Sometimes, and this can happen. So I'll give you an example. You could be working for a startup. Right. Now, because you were working for a startup, they couldn't bring you on payroll because they themselves were a startup. They had to keep things flexible financially. Sure. So you are a 1099 earner who is now all of a sudden a W-2. Right. Well, that's great. But now, because you're working for the same company and everything else is good. Yeah. Imagine your 1099 income shows up as $70,000. Yep. Right. But now that's pre-tax. That's pre-everything. Yeah. Right. So there's a different way your tax returns will reflect what your actual income is for you to qualify. Right. Now they switch you over to a W-2 as a salary person, and now they're paying you $100,000. Yep. Funny thing is, that's an easy way to get qualified. It's perfect. And because you're in the same industry and everything is consistent, no problem. You get 30 days to 60 days of pay stubs, so you only need to worry about it for 2 months, but then you can qualify, right? Sadly, you are someone who's been making $70,000 in the same industry because of COVID or any other reason, right? Like you got into a fight with your boss, or you decided you had better ideas and the company didn't value you.
Right.
You now have become self-employed. So you were making $70,000 from someone.
Yeah.
But now you're making $150,000.
Yeah.
Because you are just smarter and better.
Right.
It shows up on your numbers. It's not like you're hiding this, like, under a mattress.
Yeah.
It's on your bank statements and
Right.
checking accounts.
Right.
But now you have to do that for 2 years because you've never owned a business before. Now, how is that fair?
Yeah.
Because had you just stayed under the corporate system and kept your head down,
Yeah.
and made the 70 grand,
You never made it to the 150.
you couldn't qualify for this house.
Yeah.
Now that you're making 150, you got to wait 2 years before you qualify, because it's like they think you're a fluke. Now, I understand if they're like, hey, give it 6 months, you've never run a business.
Right.
And, the other stats are there, right, in the industries. Like, how most business, like restaurants, right? Like,
Yep.
so many of them fail in those first 2 years.
Yep.
So they use that experience, but I'm like, you can't put everyone in that box. There has to be a way that you're separating those people. I mean, you have to treat them as people. Now,
Right.
corporate businesses, they don't have time to treat you as a person,
Yeah.
right? You're just a file number.
Right.
All right. Oh, great. When they hit 2 years and they have 2 years of tax returns, give me a call. Otherwise,
Sure.
they're going to have to pay this 9% while everyone else gets 7%.
Right.
Well, now when you're at 9%, you still can't afford the same house you were making at $70,000 salary.
Yeah.
So you see how the system's kind of...
It's rigged against you.
I don't know about rigged, but it's just it's very inflexible. And
Sure.
like I said, I'm not the smartest guy in that room, so they obviously know something I don't. But I'm not understanding how you can't create a little bit more separation,
Sure.
or at least create more rectangles instead of just squares in terms of the boxes,
Right.
without charging people more or penalizing them just for being a business owner. You could make $100,000 salary, and then you could make $175,000 as a business owner, and somehow the $100,000 salary person, A, finds an easier path, B, gets a better rate, right? So how does that make sense? You
Yeah.
own the hospital, but the doctor gets the better house.
Right. Cost of doing business, man.
Sorry, not to be on a soapbox or something.
No, it's good.
But here's the thing: my dad, his brother, both of his brothers, all three of his brothers, every single person's self-employed.
Yeah.
And when I look back, they came here and they're immigrants and everything, right?
Yeah.
And so it's not a political thing, but to me, these self-employed people who did everything right, created jobs.
Yes.
They created some kind of consumption economy that's been a positive for society.
Yes.
And their penalty is, oh, you took deductions as a business owner. Your taxable income is only $30,000.
Yeah.
Your W-2 because you wanted to reinvest into your business so that
Right.
you could have more employees and grow this.
Right.
Your reward is your employee got a Benz and still got to buy a $800,000 house.
Right.
And got to send his kids to a better school district.
Right.
Even though you generate $1 million in sales and volume and all this other good stuff.
Right. But to combat that, the non-QM loan combats that.
It does, but remember, non-QM, the rates are higher because now they're taking factors that are not fitting those boxes, right? So non-QM, remember, all this money comes from somewhere,
Right.
Right? So there's investors or banks or whatever you want to call them, wholesalers, and
Sure.
this is their opportunity to make money on money, in essence.
Right.
Right? So if I gave you a pile of $1 million,
Yep.
and you have the cookie cutter people, you make less money on them.
Right.
They get cheap because according to the system, they're less risky.
Sure.
You're telling me if you don't take care of the guy who's giving you a $100,000 salary and then that company shuts down, what happens to the guy you just gave the $800,000 loan to?
Gone.
I don't have a job. I can't pay. I'm going to go on unemployment. Take my house.
Right.
And I'm not saying they're all like that. But what I'm saying is, and then think of the mentality of the business owner. Think of your mentality.
Yeah.
You're here for a reason.
Right.
I'm here for a reason.
Right.
You're here for a reason because you're like, you know what? Nah, dude, I will, for 2 hours a day, I will do something. For 8 hours, I could work 5 different jobs and still make that income. That's the mentality of a self-employed entrepreneur, whatever you want to call them. That's the self-made mentality.
Right.
And people laugh at it and people make fun of different generations, right? Like everyone's like, oh, like millennials and, like all these guys, they're lazy, they don't want to do anything. So I'm like, I'm not getting into those conversations. That mentality still hasn't changed. Whether
Right.
you're an influencer or like an old school, blue collar, like you started at blue collar and then you created a business of blue collar.
Right.
It doesn't matter.
Right.
You're constantly penalized the way this lending system is created. You're either paying higher rates for not paying taxes. See, that's the truth of it, whether anyone likes it or not.
Wouldn't that be the ultimate strategy? I mean, to me, because within the plan, we're going to refinance out of this interest rate.
Sure.
So,
but you still have to take certain steps to fit back into that box, which we're going to be doing.
right.
Right?
What's that look like?
Well, I mean, you have to make a certain amount of payments and everything.
Well, yeah.
We're obviously going to readjust certain financials in the way they have to be. Sure. And this is why I've created that roadmap of, okay, when you want to get back to this, these are the things you have to do.
Yeah.
All of those include one common theme. And like I said, I'm not whining about this. I'm just pointing out the genuine difference. Yeah. I'm not saying this is right, this is wrong. Like I said, that's been decided by people way smarter than me. Someone somewhere calculated the risk factors and all these other things that I have not done. Yeah. I'm just looking at it as someone like, look, man, my job is to get you a path, to get you keys so that you can flourish. You're a business owner. Right. Why are five, let's say, for example, why are 5 of your employees that you do pay stubs for able to do things so much easier?
Sure.
Isn't life already tough enough being a self-employed person with the pressures that come with it to go make an economy
100%.
grow?
Yeah, 100%.
And now on top of it, you and your family have to pay extra for what? I understand if there's risk factors and that's just the way it is.
Yeah.
To me, I'm like, if you've done it for long enough, I understand if you have to pay more for the loan fees or something because there's extra work done.
Sure.
But here, when you make those monthly payments and you pay those property tax bills, they're all coming out of the same checking account, whether you have a W-2 or not.
Right.
Right. So when you say, what does it look like in terms of refinancing and stuff?
Yeah.
The thing is, you're starting off at such a higher payment point.
Right.
Everything's going to feel like a good refinance.
Yeah, absolutely.
But the person who's also getting the loan, maybe your neighbor, right? Where you're getting the house, your neighbor's, let's say, moving in like 2 days after you, but they're W-2. They don't have to worry about this. But they might have just been, they might have just switched companies 6 months ago. But because it's the same industry and there's a certain level of consistency, they get all the same benefits, even though you don't know how they're going to do in the new company.
They get all the same benefits, meaning the price I would get after I refinance.
And the rate. They don't have to worry about refinance. You're refinancing because your rate's genuinely higher than your neighbor's.
Well, right.
So there's a need for you.
Right.
Until the market dictates it so, whichever way it goes, that person doesn't have to worry about a refinance. But they might still have a very similar down payment to you. They might have less credit than you.
Yeah.
So why do they not have to stress about a refinance, but you do? And you might even you genuinely are making more money than them. I've seen your financials. Yeah. I could tell you if 3 of your neighbors are all like some point like W-2 earners, you're probably making more than them.
Right.
But now you're also paying more than them.
Yeah.
And like I said, it's not a soapbox, but
so I'm like okay with that trade-off.
I'm not saying that it's like I said, I never said this is right or wrong.
And I'm like, I agree completely, but I'm also
just funny
like,
to me.
I just don't know. You know what? It's fucked up and backwards is what it is. But at the same time, I wouldn't have it any other way.
Well, listen, you're getting what you want at the end of the day, and you're understanding the value of that.
Yes. We'll see. That's the difference. I understand real estate as a wealth-building tool, and this is just the first investment.
Because you're a business owner. You see this. And the funny thing is, the W-2 people, if you ask most of them, I'm not saying all of them.
Yeah, for sure.
Many of them, they work so hard. They stay clean, right? Income, credit. They stay so paranoid.
Yeah.
They'll buy one property because everything else also, and this is not my industry, this is not my expertise, so I'm not giving this advice.
Sure.
I'm just noticing the result is they also always have cookie cutter financial representatives.
Sure. Yeah.
401k, this and that. I'm like, you're a financial advisor. Where is your, real estate portfolio section?
Yeah, dude.
It's missing. There's a few amazing people that I have worked with, and they work all of this in.
Yeah.
It's not just, life insurance, index. I'm not getting into all that, but I'm just saying this is all most of these guys talk about because it's easy to sell.
Right.
Just like with you, I took the time.
No, absolutely. And I think, so I guess just to...
Sorry about that.
No, you're good. Going back to the HAP question, because I'm actually curious for myself, what is going to need to happen for me to refinance? Is it anything drastic, or is it just...
No, it's the time. And we're also chasing certain rates because it has to make sense.
We're going to try and time it a little bit.
Which you always have to.
Right.
And like I said, it wasn't like a rant that it's negative versus positive.
No,
it's just different. To me, it's just, and maybe in my eyes, like I said, my dad said I'm a little weaker at math, so sometimes maybe I'm not seeing the picture.
No, I think your life experience is a indicator for where it comes from. Like you had the immigration come over. You guys immigrated over. You guys are kicking ass at the American dream, but you're being penalized because you aren't cookie cutter. So exactly. I think your perspective, and my parents immigrated. My mom immigrated over as well. And I totally understand it too. I just think for me, the way that I look at it, I'm like, my earning potential is unlimited. I don't give a like, you know what I mean? Like,
but I'm agreeing with you.
Yeah.
But not every self-employed person is in your boat.
No, for
the
sure.
same level.
For sure. I'm not saying that. I'm just saying,
but they're still better than that same cookie cutter person.
Yeah.
Right. So like I said, it's all subjective to that point. But to me, it's like, it slows you down is what I'm saying. Now you have the capacity. You're also positioned in a certain way.
Yeah.
My apologies.
It's okay.
Again.
You're fine.
But you're positioned in a certain way.
Yeah.
So that's why you're able to see that longer picture more comfortably.
Right.
Everyone else still has the same vision as you. This is a wealth building tool and all those steps.
Yeah. I also have a massive stomach for risk, but that's probably another conversation.
That's personality. That's completely different conversation.
I'm like, we're doing this regardless of, I don't care. I'll sell my arm.
I have someone who makes a W-2 income.
Yeah.
And then all of their side businesses, I'm like, why do you do this? He's like, because I'll have bad habits if I don't go to work every day.
Fair enough.
They make so much money on the side, yet they're like, this is my 9-to-5 life.
Yeah.
Because and this is just his personality. He's just more like, this is just how I like to be comfortable.
That's funny.
Life is good.
Yeah.
Why am I rocking the boat?
Yeah. Okay, another question for you. This is a specific loan. I have two more questions, but I have one specific one relevant to me and then one general one.
Sure.
Specific to me, because I always get this confused. Again, I'm still trying to understand loans and refis and all this stuff. Mm-hmm. There's two types of refis as I understand it.
Yes.
Cash out refinance.
Yep.
Interest rate refinance.
Rate term.
Rate term.
Right.
Cash out refinance. Mm-hmm. You're going to benefit from pulling a certain percentage of actual
equity.
Cash out.
Right.
Does the interest rate change or does it stay the same?
It changes.
So if interest rates drop and you do a cash out refinance, that's like a double dip.
I mean, you mean a double positive, you mean?
Double positive.
Yeah. Well, okay. So if I can give you a specific...
Yes, please. For the love of God, please give me a specific example.
I'll give you a specific example. So let's say that your loan amount is $600,000.
Yes.
Your house is worth $1 million, right? But your rate is 8.5%. And now rates have gone down to 6.5% or 6%. Mm-hmm. So that's the rate term. That means that if you're not pulling any equity out, you're just dropping your rate.
Yep.
Keeping the term, whatever you want. You could also go into a 15-year, then the rate's a little better.
Sure.
You can do another 30-year. So that's the term part. That's why they call it rate term.
Right.
You're just dropping your monthly payments to give yourself some relief or do other things with that money.
Yep.
And so you're not doing anything else to the equity in your home.
Right.
So now you're not changing the risk factors for the bank.
Right.
Because they're giving this to you, and on paper, you've become more valuable because now you owe them less.
Right.
They're making the 8.5% interest on you.
Okay.
And according to them, they're like, because you're not touching the equity, if something goes wrong, they get to keep more of your money.
Sure.
They're more protected.
Right.
So because of that, they incentivize it. So they're giving you the best rate possible for not pulling money out, which is your own money, which you have now paid down and built.
Right.
If you cash out, it might be like, for example, a 0.5% kicker. They're like, okay, you're taking some equity out. You're kind of messing with my risk factors here.
Yeah.
Right? And you've made money on your money, which banks don't like always, unless it's through them, because then they get to charge you fees for it.
Sure.
So instead, they're like, all right, if you're going to cash out, it's going to be 7%.
As opposed to
6.5%. Like, it could be a 0.5% higher.
It'll be a better rate, but slightly not as good.
It'll be slightly above the best rate possible because you're touching your equity.
Which is still tight.
You've rocked the boat, but which is still great because you're at 8.5.
Yeah.
So it makes sense either way.
Yeah.
So yeah, those are the two general types. Cash out. But now the only thing is I always worry about the cash outs because they're sold in so many different ways.
Sure.
So like pertaining to you, I'm not worried.
Sure.
Because you're a business owner, you have a plan.
Yeah.
And I'm not saying just because you're a business owner, but you know how to handle money to a certain point. Otherwise, you wouldn't be a business owner anymore. Sure. Right? And so with you, I'm not worried. So if I'm telling you, hey man, like I'm also going to pull an extra $100,000 out, the way I'm calculating this, I'm going from 8.5 to 6.5. Mm-hmm. Could I be at 6? Yeah. But I'd rather pay a 0.5% extra and get 100,000 cash today.
Put it in the bank. It'll subsidize my payment for the next whatever.
Buy another property.
Yeah.
Put it into 5 different vehicles that could make more money than this.
100%.
The difference in the opportunity cost is only 0.5% anyways.
Yeah.
And the 100,000 is technically your money anyways.
Yeah, and it's kind of crazy. Like, it's just so crazy. If you can get 100,000 out and put it into like an Apple savings account with a 4.5% yield, oh my God, you'd just be making $500 for nothing.
Right.
A month.
Now, of course, your monthly payment also goes up because it's
Talk to me about that.
re-amortized,
Yeah.
Right? So if you do a cash out and it's another 30-year fixed.
Yep.
Right. So now your monthly payment is going to go down overall from 8.5.
Sure.
But it's going to still be higher than what it could be because you took that extra 100,000 out. So now your loan
The
balance
0.5%
went
or
up.
whatever they dictate.
And plus the loan amount went up. You took $100,000 from yourself.
The loan amount went up. That's right.
But it's a smart decision as long as you know what you're going to do with the money.
Have a plan for it. Don't just spend it.
Exactly.
Yeah, that makes sense.
So that's to answer your question pertaining to you.
Yeah.
When that time comes, we compare the rate, the equity, and what you're able to pull out, and then you'll be able to make that decision either way.
Right.
There's no rule that says you cannot refinance often. So I've lived in my house for 15 years now.
Yeah.
Right? I've refinanced twice.
Yeah.
Not twice at once, but once when the rates got better.
You just have to wait every 6 months, right?
First of all, the rates or the market might not even change enough, and the equity might not usually change enough. COVID was an outlier. There's people who literally bought in 2019 December. They refinanced by April or May. It was still 6 months at the end, no matter what. But they refinanced fairly quickly, and then they refinanced again 6 months later.
Why wouldn't you?
But that
changed
was
so much.
Just like 2008 to 2010. It was just where it was a negative thing.
Yeah.
This was a really, really rare and unseen positive window. And today we're paying because of that, though.
Right.
There's a negative impact to that. Mm-hmm. We're on the back end of that pebble.
Do you think we're headed towards another mini version of that going into election and these interest rates about to drop and everyone on the sideline waiting to buy?
So this is not my thought at all. There's a couple of industry professionals who've been doing the lending business for over 25 to 35 years, right? And they've had a much better, because they just mathematically they've been around for more elections than I have, right? My frame of reference is only literally 3 election cycles,
right?
2008, 2012, 4 election cycles, and 2020, right?
Yep.
Every single time, even because they said this, so I started looking at it.
Yep.
The year before the election, the year of the election, and the year after the election.
Yep.
Is always some kind of refinance cycle or a cash out refinance cycle.
Yep. Yep.
There's always a cycle. It's just there.
It's
designed
I'm with
for
it.
it.
I'm with it. I'm buying and ready to do it all.
But, that's the politics affecting economics. I'm not an expert on the politics part. And, I only know a little bit about the economics of that because each cycle has had its own weird thing, right?
Its own
2007, 8, and 9, it didn't matter what the rates were. Everything was going to hell. By
Who was
2009,
8, Obama was
7 was Bush, 8 was Bush, even though everyone thinks of Obama, but he didn't win until November of 2008.
Right.
And everyone blames him for the crash, but it started in September of 2008.
Yeah.
So not getting political is just the truth.
For sure. No, for sure. That makes sense. But I don't think that was any president. I mean, that's a very specific industry doing some weird shit that I don't think it was easy to monitor. I'm not going to blame anyone for that, except for the people doing the weird shit.
The thing is, everyone was greedy all at the same time, and that was the problem.
That's always true. Everyone's always greedy.
No, but when you're all greedy at the same time,
got it.
That's when the weird stuff happens.
Right.
If you notice, it's not that one side got greedy, because now, you've created a negative tidal wave, right?
Right.
This one was just a whirlpool.
Yeah.
The people giving the loans were greedy, and the people taking the loans were greedy.
Yeah.
That's why everything fell.
Yeah, that actually makes good sense. That's crazy. What are 3 things entrepreneurs can do to be loan ready with you tomorrow that they didn't?
First thing is have a conversation with me.
Okay.
Because if we have a proper plan in place and I can understand what your trajectory is going to be, then we can start setting proper achievable goals.
Right.
As opposed to, because once you're rolling, you're going to be so stressed, you don't have time to go back and be like, wait, did I miss a turn?
Sure.
So it's better that, hey, I'm doing a startup, or you know what, in the next 6 months to a year, I want to start getting, I want to get a house, right? Sometimes it might just be like, a lot of times I've had clients where they're like, yeah, I'm probably going to buy in a couple of years. 3 months later, they're like, hey, man, I'm pregnant. I need to buy a house because I need a bigger place. And the bigger place that I need the rent is so ridiculous, I might as well look at buying, right?
Yeah.
So there's different situations that bring you there. But strictly as an entrepreneur, the best thing you can do is get a proper team in place. I would love to take credit like I'm the first person.
Sure.
But I would then say, okay, who's your financial advisor? You don't have one, you haven't even thought about it, no problem. We're just having conversations. We're not committing to anything. This is like, you're just doing your research, just like when you decided on your business.
Right.
All the steps you had to take. You had to study the industry. You had to understand, A, where the costs were.
Yeah.
Then the risks, then the positives, right? Where am I going to make the income? Who are going to be my customers? Like, you had to look at all that.
Sure.
So look at your own journey that way, and then have the right people.
Yeah.
Talk to me. Okay. Tell me what you want to do, or what you're. And sometimes people get conservative, and I'm like, why? I'm not saying like, oh yeah, I'm going to make $10 million in 6 days. Great. I'm really happy for you.
Sure.
But give me the realistic path. Don't be too conservative, and then don't be way too optimistic.
Right.
Just kind of down the middle, right? And then when we break that down, we talk to a financial advisor. We talk to a CPA, right? Someone's got to be helping you on those sides.
Right.
And then we start to structure it. Okay, this is what you're going to be. This is your expected income.
Yep.
Now, the financial advisor will be the first one to tell you, look, a house is always a good idea. And if you really need it, fine, we'll work around it. But these are the kind of payments you should expect. Do you want to burden yourself on the personal life with that kind of debt this quickly into your business? So when you're going out for a job, you don't have a choice, right? You have a 9 to 5, you're working on someone else's terms, and this is the money you get, and now you have to work with what you have.
Yep.
You get to control that destiny a little bit as a business owner.
Yep,
and if you're doing things wrong, you get to pivot on those before making other commitments that can, like, you never want to take problems at home to work, and you never want to bring work problems home.
Yeah.
The biggest thing that can happen is when certain miscalculations happen because you were either too aggressive or too conservative. Because if you're too conservative and now all of a sudden, and again, I'm just using this as an example because this happened to a client of mine. Sure. They work so hard to get a property and everything. He's a brilliant businessman and all that stuff. And all of a sudden they're pregnant and all this other stuff. And now it's like, like your mindset is going to change. Yeah. Right. And now he's like, well, I'm stuck in a situation where my current rate is at 3.5%. And I wasn't planning to have kids for 7 years. And I'm like, okay. And he's like, well, but I can't afford another house. We're going to have to rent. Right. So now he's going to have to make some tough decisions. But I'm like, that can happen at any point. Don't beat yourself up. But he's taking it rather hard. But now he's lucky. His parents and other, his in-laws and stuff, they're all going to help him. Right. Nothing bad's going to happen. He's just not going to be happy because he's having to kind of do a forced purchase. They're still going to be fine. Right. Payment's going to be fine. Business will be fine. But, it's one of those where it's a bitter pill to swallow. Yeah. But I'm like, look at the blessing, man. You're doing all of this for your kid. Make sure you kind of document this and rub it in their face someday if they're ever a brat. Yeah. Yeah. And but the blessing is your kid's forcing you to become a real estate investor, even though you never had that in your business plan. You're moving out of your townhome. You're getting a bigger house.
Did he keep the townhome?
Yeah, I structured it in a way that I'm like...
Did you do like some kind of refi to get extra cash?
Well, I got yelled at by one of the parents, like, why are you telling him to rent? And I'm like, sorry, I don't mean to raise my voice with you, but did he not tell you the numbers yet? Because obviously this seems like it was like a dining room, conversation that's flown into my lap. Sure. No, we're really happy. We're going to be grandparents, but why are you telling him to rent? That's a dumb idea. And I'm like, you're right, but if they need a bigger space, what do you want them to do? Well, they can buy a house. How are they going to do it? I'll pay for it. I'm like, cool.
Oh, wow. Okay.
You want to,
So were they going to rent their other space out, keep it, and then just rent another
the way we structured it, they're just going to rent the space
out. But it all worked out to now they have their old house and have a
Well, the in-laws were going to become grandparents, and so they all stepped in to help.
They do.
And he did not, like I said, everyone, when you're a business owner, you also have a certain amount of pride and ego that kicks in. Trust me, everyone has it.
Bro, I don't give a f***, mom and dad. You want to give me whatever, and they did help. So exactly, I'm like, you want to help more, bro? Delilah's here. I'm here.
I went to BOP for my loan. And it's called Bank of Parents. Like
that's right. Yeah, I could give. I could give zero shits about privilege. If you have any sort of help, can take it. Yeah. There's no pride in me. My parents know I got their back when the time comes.
That, but also, the parents aren't dumb, man. They know where the investment itself is going. And remember, once you're going to become grandparents, there's also like, okay, this is for the grandchild. We have to love you now. Right. We know what we're doing this for.
No, 100%, man.
So it works out. But it's been just a funny journey because he's still like, oh, man, they're going to hold this over me. I'm like, bro, I want you to think about it this way. Your kid has made you a real estate investor. And someday when you wanted to do investments and you didn't have enough money, you would have gone out there to get partners.
Yeah.
The universe gave you partners.
Right. Okay, last question.
Sorry. Anyways.
No, it's amazing.
That was a little...
No, I love it.
You know.
A little frou-frou at the end. I'm into it.
Foo-foo, you know, yeah, that's what I'm saying.
Yeah, I'm into it. What is something controversial or a hot take you have on something traditionally agreed upon? Last thing.
Ooh, that's putting me on the spot, man, because...
Give me something good.
I'll get in trouble.
Can you get in trouble? Okay, what's something... What's...
Not in... I mean, I'm not trying to get...
This is not
trying to get
advice,
into...
but here's what I believe.
Look, I don't mean it in a disrespectful way, genuinely, and this is not like a compliance thing or anything, okay? I just think that somehow a hot take is everyone's like, oh, interest-only loans. Like, a lot of people don't even want to properly bother doing the math. All the successful people, like the ones who've been around for a long time, they will like this, but they don't like to pitch it necessarily because they want to be responsible as well. I'll tell you my hot take. And this was a rumor because so far it hasn't come to fruition. But supposedly they were going to introduce, because of the way the rates were going and stuff in these last 2 years, there was a lot of rumors going on. The one I liked was a 10-year interest only with a 40-year fixed. So everyone has, I've heard mostly negative to this is crazy opinions on it. I'm telling you mine, and maybe it might not be as hot a take because there might be people who just don't admit it. I think it's phenomenal.
So it would be 10 years of interest only.
You get the option. So you have a 30-year fixed, right?
Okay.
10-year interest only. I don't know if they would have a prepayment penalty because, you know, sometimes they want to lock you in for a few years or not. But that means you get 10 years because especially if you are young, if you're like the influencers and all these other people that you're making the money, but it's just not structured. There's no, you know, like...
Is the interest only a bank statement loan or is it anything?
You can do interest only with anything if it's available.
Is there non-QM interest only?
Yes.
So like I could theoretically qualify for that now?
100%. Why
would I not do that?
Because right now the non-QM ones, they go more towards investment properties and those kind of products. Because when you're doing it for your primary home, the thing is, when it comes down to your house, you're going to do everything to save your house until you just walk away from it. And if you're willing to walk away from your house, like you're going to do everything to save it, destroy everything. You might sell off your cars, do everything to save your roof and your family and all that, right? So they use a different schematic when they design these loan programs for you guys. That's why they give you 30 years. It's all fixed. They try to create stability for you. Interest-only loans, I mean, you can do a 5-year window, 7-year window, 10-year window, right?
But 10-year interest only is still going to cost me just as much as a 30-year fixed, right? Because you have to try and pay all those. The payments are dictated upon 10 years and not 30.
No, 10 years is interest only. That means your payments will be super low.
Oh man. But I also want to build an investment and you
want to build equity. So to me, that's why it's kind of a hot take. The way I calculate this is, to me, give me 10-year interest only all day. But I'm speaking to the business owners of this world.
Right.
If you don't have to be perfect with your money. No one is. But even if you do a decent enough job, you will figure out how to create enough equity in those 10 years. You will figure out what to do with those savings. Because right now what happens is when it's a 30-year fixed, every payment that you make, right, a part of that payment is forced into paying down the loan of your house.
Yep.
Well, what if your house is dropping and I don't want to put... When you have a car payment, you're going to do the minimum payments because your car is losing value every month. If my house is losing value for any... It's rare, but if it is losing value for any reason, why is the bank forcing me to dump more money into that?
Sure.
I could do 100 different things with that money at some point.
Right.
You don't get that option. I mean, in business, you would do the same strategy. Right?
Right.
So, to me... A lot of people are like, that would be so crazy. Can you believe making a mortgage payment for 40 years? Those are the same people at the same time.
Yeah, I'm not really. I don't care. I have other clients who are like, you're not trying to pay off your house. You're using it as a savings vehicle.
Well, it's not that. So the same people who go, oh my God, isn't 30 years a long enough mortgage that you have to pay for 40 straight years? And you know what? And those are the same people that'll, when they're selling it to their clients, are like, oh, but don't worry. The average homeowner usually moves every 7 to 10 years.
Sure.
I'm like, then why are you freaking out about a 40-year mortgage?
1,000,000%.
Because if that mortgage gets you keys to the house, it stops making you a renter. I mean, if that gets you closer to your dream and it's in a responsible way.
Can you build equity on an interest-only loan?
100%, because you can put extra money towards your loan amount anytime you want. It's kind of like having a credit card for the first 10 years, but your house is the collateral, right? So you can make the minimum payments.
What about refinancing on a 10-year?
Yeah.
Can you refinance from interest only into a traditional?
Rates get to where you want them to be. The payment gets to where you want it to be.
Why would I not do this then?
Hot take. I don't know if that counts as hot. I'm not in the media that way. All the hot takes I have are from ESPN, so I don't know what else to do. Jordan sound like Charles Barkley and eat donuts, but
I have more questions for you. So
Please
it's been
do.
an hour.
Sure.
Well, no, but now I have personal questions. What's up?
Are we in that part of the show now?
Yes,
I'm just kidding.
Yeah, we've entered the late hour.
Sorry,
but it's been an hour, man. That was fascinating. I could talk to you about this stuff forever because I'm very, very, very intrigued. And I'm just trying to learn and soak it all up now that I'm getting into the real estate market.
I cleared 2 hours for this today.
Yeah, so perfect.
Because I wasn't sure what the process was, so I'm like, man, I'm going to be the king of bloopers.
Nah, this is easy, right? We're just talking. Explain it to me.
I can't believe I'm not sweating and it's fairly warm in here.
Dude, it's easy.
But you know what? It's because it's you. And the questions you steered me and stuff, I haven't had a chance to think. And
that's perfect. Well, I'm just extracting your.
Tell my wife that.
I'm extracting your knowledge without.
And I hope I gave you some proper information.
Bro, I love it.
I didn't go on weird tangents or anything that kind of made you be like, "What the hell just happened?" You know.
Man. Well, Rush, thanks for being here, man.
Thank you so much.
Where can people find you
me.
and get in contact with you?
Well,
my entrepreneur friends, if you need a loan to buy a house and you think you can't do it, I'm here to tell you absolutely can, and this is the man to do it with for. So where can they find you?
We have an office in Tustin.
Okay.
I have another small office out of Brea, and then I live near Eastvale and Chino Hills.
Okay.
So you can find me in Southern California. Cool thing is the companies I'm partnered with, we're able to help you in 43 out of the 50 states.
Great.
But on the real estate side, I know realtors in all 50 states. So I can make sure, I don't want to steal any company slogans, but I'll make sure you end up in the right hands.
Right. And for Instagram handle, just somewhere someone can get
on Instagram,
contact.
I'm Rush, the lower underscore Shah underscore lending. You can go to lendingrush.net.
There it is, lendingrush.net. So go to lendingrush.net to get in contact with my man here. I'll take care of you. I never thought it was possible. It definitely is. We got to do it again because I have a million more questions.
I look forward to being back, and thank you for having me.
Yeah, absolutely, bro. Thank you.
All right.